So this is a true story of how I helped a fellow doctor to grow his £20,000 to £33,000, giving him a profit of £13,000. So, about 4 years ago, my friend had put a large sum of money, 20,000, to a fund manager to help him grow it. And 2 years after, I asked him casually, and I said, okay, so how is it going? How is this your returns going? And he said proudly to me, guess what? I have made over £2,000 profits. That is 10% over the last 2 years. I tried not to react too strongly, but inside I was shocked. Why? Because over the same period of time, my own investment had doubled, literally doubled from DIY investing. So I explained to him how to do it himself. Simple, low cost, smart investing. He trusted me and pulled out the money from the fund manager and followed my strategy. Fast forward to just few months ago, he called me again and said, Tosin, I just checked. That same money is now almost £40,000. I laughed and told him, you know you owe me about £15,000. Do you know that? Hello and welcome to Rich in Progress, where we break down money management and investing to simple, practical steps anyone can use. Please help me by subscribing, sharing and commenting. It will help my channel as I educate you on 15 years of my investing experience. I have made the mistakes so you don't have to do the same. Now, fund managers aren't always the best option. Yes, I know they are professionals. Yes, they have offices and fancy dashboards and they wear suits and they say some complex jargon. But let me tell you, number one, they charge high management fees, sometimes up to 2% annually. Imagine this, you invest $10,000 and leave it for 20 years. Even if your portfolio earns 8% annually, a 2% annual fee might not seem like much. You say it's not just $200, but over time it can eat up tens of thousands of dollars in potential profits. Take for example, if you put $10,000 with a fund manager at 2% annual fee for 20 years, if your investment grows at a moderate rate of 8% per annum, you would have paid $14,500 on fees alone to the manager. That's 1.5 times more than your initial investment. If your investment did better, and for example, it increased by like 12% per annum, over the 20 years, you will be paying $30,000 in fees. That's because 2% isn't just a one-time cost. It compounds against you year after year. It's like having a leak in your wealth bucket, always dripping out profits you worked hard to earn. Number two, fund managers buy and sell a lot, meaning extra transaction cost. These managers often try to beat the market by constantly buying and selling stocks. But each of these trades come with a cost, whether it is a fee, a tax, or both. And here's the kicker. More trading doesn't mean better results. In fact, many studies show that the more they trade, the worse the return tends to be. All the while you footing the bill for their decisions. So while your money is supposed to be growing, it's often being chipped away by constant movement and hidden costs. You can watch my last video to see why you should buy ETFs and not worry with buying and selling individual stocks. Number three, and this is the worst. Some of the fund managers have incentives to put your money in companies that pay them, not the ones that perform best for you. This is the part that frustrates me the most. Some fund managers have financial incentives to direct your money or invest your money towards certain companies or ETFs. Not because those companies are great investments, but because the fund managers themselves are getting kickbacks or commission or partnership perks. That means your money could be going into underperforming or risky assets simply because it benefits them, not you. So ask yourself, are they investing what will grow my wealth or what will grow their wallet? That's why your investments might grow, but slowly, and you will never really know how much you lost in fees. Now, so what's the alternative? This is the alternative. Learn to invest in yourself. Today's video will demystify investing. I'll show you the exact platforms you can use right from your phone. You don't need any Harvard degree, no complex finance background, no complex finance, just your phone and a bit of knowledge. And no, you don't need me. In fact, if you watch all the videos I will put in on this channel, you will know enough to build long-term wealth without paying anyone else to do it for you. Now, I know people watching my channel, this particular channel, fall into three main groups: those in the UK, those in Nigeria or other parts of Africa, and those in US and Canada access, North America. So let me start with the UK. If you are in the UK, there are quite a few platforms available to trade. You have Freetrade, you have Hargreaves Lansdown, HL, you have AJ Bell, you have Interactive Investor, you have Trading 212, and Vanguard UK. I will put the links below if you want. I've personally tried many of these, and maybe one day I will do a full review of each. But if we are keeping it simple and beginner friendly, there are only two of these platforms I would recommend. Number one, Trading 212 and Vanguard. Now let me be clear, this is not sponsored by either platform, although I hope one day it will be. This channel will grow to a place that they can sponsor me. But genuinely, it is the easiest, especially for busy professionals, Trading 212 and Vanguard. If you are in Nigeria, yes, you can invest from Nigeria too, and you should. Some popular platforms include Chaka, Trove. I've tried Trove before, Rice Vest, and Bamboo. A very close friend of mine says that Chaka and Rice Vests are probably the best. He says the user interface is smooth and withdrawals are quick. Now, I've not personally used them because I don't live in Nigeria, but this third-party opinion is worth checking out. And just like the UK, these platforms give you access to US stocks, ETFs right from your phone. If you are in the US or Canada, you've got several options, even more options. You have Robinhood, which is great for beginners and stock pickers. There are downsides to this. eToro, you can use it for crypto also. You have Fidelity, and you have Charles Schwab's and Armitage. There are many other options. But remember what I said earlier, Vanguard is global. And yes, it is also available in the US and Canada. If you want ETFs, index funds, or long-term stability, Vanguard is still top tier. Now, take control of your money. Nobody will care about your wealth more than you. This is your life. Don't put your future into the hands of financial fund managers. Your future is yours. Take control of it by learning how to invest DIY by yourself. Please subscribe, share, and comment so that this channel grows better. Thank you very much.